Today, we'll give you updates on Piper Sandler and Baird upgrades on Tesla stock and a surprising move by Morgan Stanley. But the big topic is a trillion-dollar question investors are asking, whether all this investment in AI will pay off. Venture capitalists and big whale investors are missing the big picture. They're too focused on the short term and the wrong kind of AI. Night View Capital's answer to this question is to look outside and at Tesla. Where's AI? Is the self-driving cars already on the road? They forecast that by 2030, robotaxi could generate trillions in revenue through multiple income streams that they lay out. Is this difference between some investors who only see Tesla generating $5 billion annually from AI, those other investors who Tesla generating at least $500 billion, a 100 times difference. More and more institutional analysts are waking up to the Tesla investment story. Piper Sandler's Alexander Potter just raised Tesla's price target to $310 and keeps an overweight rating. They see higher estimates for deliveries in 2024. And Baird's analyst Ben Kallo was on CNBC, refreshingly talking about his fantastic experience as he tested Tesla's full self-driving. We'll watch that video today. Morgan Stanley has a surprising downgrade. And no, it's not Tesla stock. A lot to cover there today. Some of the big questions. We're seeing institutional investors waking up. Welcome, Brian. How are you doing?
I'm doing great. The thing is that AI is the future. We know it's the future, but where's the money? And that's what these analysts are finally getting into. And it's going to be quite a ride.
Yep. We're going to talk about the future, but also the short term. Thank you so much, Brian. Check out his YouTube channel called FutureAza. He does even more deep dives than I do. He's the brain trust. He's the guy I pull the real deep information from and the facts. So let's go with this big article from Night View Capital, the trillion-dollar answer to AI's biggest question. So what happened was Sequoia, a venture capitalist firm, had this essay that went out that went viral. They're asking the $600 billion question, right? Like, what is the value of AI? Why are so many companies and investors investing in AI? Is it just a bubble, or is it going to actually generate actual financial return? And, this is what this analyst says, is that we think Sequoia is missing the big picture. They're too focused on the short term and the wrong kind of AI. So Sequoia is asking, outside of ChatGPT, how many AI products are consumers really using today? Well, as we have been saying, and I think people are going to start waking up to, just look outside. It's the self-driving cars that's on the roads already. By 2030, it could generate trillions in revenue through multiple income streams. They outline what that is. And these guys are looking forward to the October 10th event where Tesla finally comes out and says, we're going to have a commercially viable robotaxi ride-hailing network. And now people are going to realize there's actually new revenue streams that could come out of this. What are your thoughts on this, Brian?
This is exactly right. When you looked at early streaming services, the question was, how do we monetize? Are we just giving stuff away? Amazon Prime is a good example. Oh, you get all these free movies and TV shows. Why? It's just included in my Prime account, in my Prime shipping, which most people get just for the free shipping. But then there's ways to use that to open the door to more things. And it's a way to get your foot in the door. You can look at, there are a million AI tools that people are using, but a lot of them are not really monetized, or certainly not effectively monetized. Well, you can buy $10 worth of credits or $20. That's not going to pay for anything. That's not going to keep the lights on. But FSD is applied AI. It is actually on the street today, this very second, in use for money. So there's just an ocean of difference between theoretical AI and practical. And the practical's already there, and the theoretical stuff is still building, and that'll be the harder part to figure out what it is.
Thank you, Brian. Yeah, so just so we read more on this, autonomy is no longer a theory. You got Waymo, you got Tesla. These are on the roads right now. It's early days. Pace of improvement is growing. This is Night View Capital's. This is their opinion, of course, that we're here very early. Percentage of self-driving miles is about to go boom as this expands. We have 7 million cars that's capable of doing this for Tesla. But here's the big difference, right? Some investors, including Sequoia, still believe that Tesla will get eventually $5 billion annually from their AI efforts. Google could generate $10 billion in AI revenue. That's, this is one investor who says, yes, it's a big deal. Here's how much. But there's other investors who say, well, that's 100 times lower than what we think it is. It's going to be 100 times difference. So you have two widely different conclusions. One of us is right and one is wrong, and it's probably a middle ground. So 2024, Tesla is spending about $3 to $4 billion on NVIDIA hardware to build out Tesla's AI training superclusters. Some people like us, we think that the long-term return could be extraordinary. It is accelerating the rate of improvement. Here's an example of the FSD miles, of course, and it's gone up as the company becomes less compute constrained. There's so much data out there that they can then evaluate, and then if you've got more training data, more amazing things can happen. What's your thoughts on that, Brian?
This is, yeah, it's going to be huge. And earlier you showed a chart where it said percentage, how many miles are going to be driven via autonomy. And the answer is, yeah, eventually all of them and I would agree that we are very, very early on that curve. It is going to go ballistic. And yeah, there's no reason to think it won't. You have to have the training data, but look more at the more exciting figure, which is how many cars are on the road and how many cars will be on the road. Let's say there are no cars. We're only counting new ones built after today. Even if you're looking at just a couple million a year, that's billions a month in FSD revenue that you can realize before you even get to robotaxi. And this AI, in the early days of anything, you don't know if it's going to work. Well, we now know that it definitely does. It is the right tool for this job. We are seeing 300,000 lines of handwritten C++ code reduced to 3,000 lines of code written by the AI. And it is, it works. It is actually in practice. And every time I try and model the revenue for things like this, every model that I've seen, whether it's CERN's or someone else's, I have to stop them and say, you understand that you're underestimating it, right? Mm-hmm. And they all say, yes, but when I use the real numbers, it looks insane.
Yeah, exactly.
And it does. And it does.
And that's what these guys are saying too. In their opinion, investor needs to extend the time frame, think through the implication of when, not if, autonomous vehicle scales. You just said that. We believe autonomy could be ubiquitous, ushering in a Cambrian era of new revenue streams, demolition of old models. This is by 2030. So we envision 3 key revenue streams. There's nothing new here. It's all the things we already know. Direct software sales of FSD to consumers, right? Either through a one-time purchase subscription or pay-per-use models for the FSD software updates, revenue from licensing fees to other OEMs and fleet operators, right? This is going to be the whole new business here that people are not even, considering. And then the ride-hailing service itself, it's going to be massive. Increased profitability of autonomous ride-sharing services generate trillions, multiple trillions in revenue annually. It's going to replace car-driven. And then they kind of just do a simple analysis of Tesla's approach versus Waymo's approach. Nothing new again. It's stuff that, us Tesla folks have been following. Big difference is Waymo has a hardware problem. They have to reduce. Right now, these guys are thinking that the price is $120,000 per car to add all those, hardware. But it could be way more than that, actually. Waymo. But Tesla hardware cost is only $1,500 per car, and they already have over. It says here 5 million. It's actually 7 million, but in this year, because they're able to retrofit to every car. So, yeah, we'll see what happens. But
and the
final thoughts.
The important thing. Yeah, the important thing to notice on that is when we're talking about that cost, you say, well, who cares if it's 120,000 or 200 grand to get this Waymo? It's going to be worth more than that. Yeah, but it's going to impact your ability to scale. And the scale is the key. If you're only making 100,000 or even just, 500,000, your pricing is going to be different than if you're building 5 million or even 2 million. So there's going to be economies of scale that come into play. But the bigger thing is the rate at which you will be able to deploy a fleet will be that much worse. If a Tesla robotaxi costs 1/10 of what it costs to build a Waymo taxi, my gosh, it's game over.
And like you're saying, the race is already happening now. Every day, Tesla's producing how many cars?
A day?
Mm-hmm.
It's too early. I haven't had enough coffee. Thousands.
I think 5,000 I've seen sometimes, right? If we're getting to 1.8 million, right, divided by 365. Yeah. So, every car is autonomous ready, right? It's ride hailing ready in the future. Right now, Waymo does not own any cars. They have to partner with cars, and then they've negotiating partnerships with other car companies, and then those car companies need to retrofit their production line to include all these hardware. So
And then you've
Uh,
also got the problem of harmonizing the engineering from two completely different companies in two completely different industries. And if anything goes wrong, here's the specs we need the car to do. Oh, we goofed on one spec. That could add months of delay in getting it actually into production. So there's a lot of benefit to having it all under the same roof.
Okay, so that is one Night View Capital. That was their view on the AI question. Let's take a look at three other analysts and what they've been saying recently. Here's a new drop from Morgan Stanley's Jonas. They downgraded Ford and GM. They're citing China competition, problems with the U.S. consumer. So, it's Ford and GM is just the beginning. They're there's you can see the signs all over the place, and people still
Sure.
believe. Take a look at their financials. But we've recently just uncovered the last several days that the dealers in both China and the U.S. have been screaming because these companies have been stuffing them, and it's the dealers that have been taking a hit. So he's trimmed their price target for Ford to 12 and from 16. GM was lowered to underweight from equal weight. Again, they got cut to $42. They also lowered his rating on EV maker Rivian. So why is he doing this? Looks like that China taking market share globally will weigh in. So as you know, you've been following this closely. China, the U.S. automakers are just dismal. They're almost gone in China. They can't sell in China anymore, and China's Butterfly's capacity is increasing. They're 9 million more cars than it buys, and so now they're going to go global, and then that's going to be that impacting Ford and GM even in Europe and in US, maybe if they ever make it in there. So Ford has been struggling. GM has rallied 33% in stock, but it's primarily on the ICE gas car, not its future good times won't last. So there you go. They're finally seeing that the good times, this is all fake kind of numbers being thrown there. And if it's not EV growth, I don't know what your future is.
So let's talk about that. Adam Jonas is right. He can see what you and I have been trying to tell people for about a year and a half. GM and Ford are dead in China. Ford tried selling the Mach-E. It was not a big hit. GM used to have a number of factories. They've been scaling back and stepping out. Their only foray into China really is trying to establish partnerships with brands there so they can say that they're making electric cars. Good for you, I guess. It's not going to save you. They've got some protectionist policies in place in the US that will prolong the inevitable, but it won't save them because it's a global market. Throughout the world, they're not building the cars that people want at the prices people are willing to pay. In Europe, we're seeing that these cars are not selling the way they used to. The sub-brands are not as popular. And then you've got China's expansion. So China is devouring the Chinese market, clearly, because they're making cars Chinese consumers want at prices they will pay. But like you said, they're now making more cars than they need, so they're exporting them. If you look at the MG, which is a Chinese company that bought the brand from England, those sales are picking up across Europe. Their market share is growing because they finally decided to start cutting their prices. You can get an MG in Europe for a very reasonable price. So even with the new tariffs, they're going to be affordable. And that's spelling the end for them. Is GM and Ford going to just try and tackle developing markets? Africa, South America? Maybe. India? Not likely. India does not like imported cars. They tax them at 100%. So Ford and GM are looking at becoming single market cars. Single market, North America. US, Canada, and Mexico, but that'll only get you so far, and they're going to lose their economies of scale. They'll end up in a vicious cycle, and they are on the wrong path.
And you and I are going to do another show that will drop a day or two later, I think, after this show airs, where we're going to talk about the concerns that Ford and GM might have with the US market, because the US government could apply not only the tariff of 100% tariff Trump is talking about from any car built in Mexico that's sent to the US. And they might actually completely ban any car imported from China, not just adding tariff, because if it has software built by Chinese, they don't want it on American roads. The Commerce Department is talking about this, implementing policies Ford and GM, they make their cars in Mexico and China. People don't realize that, right? A lot of their both ICE cars and EV cars. So we'll talk about that in another show. Quick comment.
Components and the components are made in China, not so much the cars themselves.
Yeah, but it could be enough to target these guys. Okay, so more analysts. So that was Morgan Stanley with a downgrade on Ford and GM. Here you got Piper Sandler. And they've Potter, right? Alexander Potter, they've raised the target to Tesla. Not much, about 300 to 310. And the reason, though, is their expectation for delivery estimates. This is now quite a trend. Multiple, at least 4 analysts have come out raising their price target for Tesla because of what they're seeing as a record Q3. They're seeing that in Q3, Tesla's deliveries have risen, are going to grow because of China, strength of China primarily. It's caught up from what it was from last year. So the delivery estimates for this year were pessimistic. And then now with the interest rate cuts and with China showing strength, although European sales are weak. So these guys are now modeling 459,000 deliveries for Q3 and still 1.75 million units for 2024 as a whole. So they do say Cybertruck's deliveries are supporting demand in the US. Higher estimates for a target bump. So I got a few comments about this. Let's talk Q3 first. What's your thinking about expectations for Q3? And then what's your expectation for 2024 total?
My estimates for Q3 have always been quite bullish. I don't understand that, there's a number of prognosticators who like to start the quarter out by saying it's going to be a terrible quarter. And then every week they revise upward until the end of the quarter when they're closer to my numbers, what my numbers have been all along. I don't care if you can predict today. Predicting the present is a lot easier than predicting the future. And some people try and predict the past. That's very easy. So I'm not impressed by that. There are this quarter is showing signs of being very strong. The week sales in Europe are down. They're down like 2.5%. Wait, 2.5%? That's not that big of a dip when you consider that the Model Y is on pace to supplant the Ford F-150 as the best-selling model in the US. That's new. That's something we haven't seen in 30 years, 40 years. The F-150's been the reigning champion. And then and we've seen the numbers coming out of Shanghai. Those are strong because the Chinese demand is still high, and there are new markets still opening up to Tesla for the first time. And those markets are expanding. They are selling more cars all the time. So the weaknesses that I've seen are not outweighed by the strengths we've seen. And just looking at Cybertruck alone, we're going to move a significant needle-moving number of them this quarter. So I'm quite bullish. I would not be surprised if this is the best quarter ever until next quarter.
Yeah, good point. Okay, so I'm going to predict the past, by the way, and just let you know, sorry, but I've got a little correction of what you said, which is shocking. Doesn't usually happen. So the Tesla Model Y is the #1 bestseller globally. We all know that. In the US, though, they've already supplanted the Ford F-150 a long time ago. It's actually Toyota RAV4. That's right there. And Tesla Model Y is just inches away from becoming the #1 bestseller.
Wow.
In
I've seen that it's it's quite close, and that it's that this is a tectonic shift.
Yeah. It could be my numbers is from Q3. Yeah.
If this doesn't concern for the executives at Ford, it should, because this has been your bread and butter for generations, since all of the board members were quite young, if not babies. And now it's the end of an era, maybe.
Mm-hmm. Okay, so you're saying Q3 it's going to be a record quarter. You're saying Q4 could even be another record quarter. What's your estimate for the year? I'm still surprised that these analysts are still saying 1.75, 1.78. So last year we did 1.8 million. Tesla did say that it's going to be slower growth than 2023, but I still believe it's going to be more than 1.8, especially with the incentives that you're seeing Tesla throw out there. The 1.99% financing, with the rate cuts coming, they're probably going to throw even more incentives there. The no down now, they're going to move. They're going to sell their cars as much, whatever they need to do to get the volume up. I think I I'd just be shocked if Tesla decides that we're going to let the volume to be lower than 1.8 of what it was last year. These analysts are still saying 1.75.
Well, and did they forget that the Cybertruck is out and every unit that they move is a unit that they weren't moving last year? I do believe the Cybertruck will eat into
70 to
S and X.
100,000.
Yeah, I believe that S and X will see some erosion in demand because of the Cybertruck, but none of the other models. No one says, I'm either going to get a Model 3 or a Cybertruck. But there are people saying, I'm going to get a Cybertruck instead of another truck. And while they may not be the majority, they're enough to make a difference. So I think that they're discounting Cybertruck entirely when they make those forecasts. And some of the people who try and predict out into the future were assigning very, very cartoonishly low figures for Cybertruck. I saw someone after, what was it, Q1 or 2 saying, oh, next quarter it's going to be like 6,000 Cybertrucks. I'm like, what are you talking about? That's higher. That's less than the run rate at the time the estimate was made. So it was, crazy. So yeah, I see
What's
upsides
your target?
Between 1.8 and 2.
Wow. Okay.
Yeah.
I just think it's going to be slightly more than 1.8, but that's great. Okay.
Mm-hmm.
Okay. Well, then and everything you just said now makes sense because Cybertruck may be around 70,000. And so that makes a difference. That's going to be the pop there.
Yeah. That's a big chunk of numbers.
Yeah. So another analyst we're going to cover is Baird Tesla analyst Ben Kallo. Guess what? He's testing FSD. He's tried full self-driving. Let's go watch this video that he was on CNBC too, by the way. So that was wonderful.
And I hear a lot of progress being made. Is that really the case?
We think so, and we've had the opportunity to ride in different iterations of the version 12, and then most recently a 12.5 maybe 2 weeks ago. And there's been the pace of progress is accelerating, and this is really because as they've talked about, they're no longer compute constrained. They do have this millions of cars on the road gathering data there, and it is a full end-to-end machine learning versus in the past or the pieces of the software that people had to code. And so I think that's one thing that we're trying to emphasize is that this is accelerating at a faster pace than it has in the past. And there's so much skepticism because Musk has always been 1 year out, 1 year out. But we do think that they're getting closer to this.
Finally, we hear somebody on CNBC. They let them on there, and an analyst testing full self-driving on their own and saying the things we've been saying. So it's good to hear. Finally, it's coming.
As I have seen Tesla bears and Tesla bulls who have never experienced FSD. And I get it. You can absolutely assess a company without using its product. You can. But there's a whole lot of faith that comes with actually getting your hands behind the wheel. Butts in seats move units. And this version 12 is very good. And the 12.5.1 is what I've been on until this morning when I installed my update to 12.5.2. It's been very, very good. And it's hard to look at it and not understand what's coming. But the bigger thing is, it doesn't have to be level 5 to be worth money, especially with subscriptions. Any subscription is real money in the month. When you hit the 30th of the month and that cycle is over, that money is counted. It is real. It is a product that you delivered. Whether some analyst says it's complete or not is irrelevant. The customer purchased what they purchased and it's done. So there's a lot of opportunity here, and they're recognizing it. Recurring revenue is very good revenue in Wall Street's eyes. And having had 11.3, I was not of the mind that I would subscribe. And when my trial ran out, I did not resubscribe. I waited until version 12 came out and I subscribed again. And now that I've got it, there's no going back. Forget just the loyalty of buying subscriptions to full self-driving or buying full self-driving. I can't see myself buying a different brand that doesn't have this. So there's a stack of different value propositions that come with this.
Thank you so much, Brian. I turn to you when you do predictions of the future. Turn to me when you want to hear predictions of the past. I'm good at that. Using your own joke back to you. But so Brian's
That's why I liked it.
Brian's going to do a video on the progress of Tesla FSD. Check out his website, FutureAza. Thank you, Brian. Talk to you soon. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.